Hello and welcome to the Wealthy Trades Options Select for May 4th, 2015. These are exclusive for paying members and trial members within their 14-day trial. These are phenomenal trades, and I go over the top five. I try to find 5 a week, top 5 picks, using options and using the Wealthy Trades data. This is one of the most powerful things I do, and one of the things that I've gotten questions on is, Tyson, you do a whole lot of stuff. I mean, I can't keep it all straight. Well, it's not all that much, and if you think about it, it's really just the day trades using the dashboard, right? The core day trades, finding are we going long or short, pairs trade. I do the weekly trades using that same exact strategy, and then monthly trades doing that same strategy. So it's day trading, swing trading, more long-term investing using the core Wealthy Trades dashboard. Then I do the earnings alerts, okay? So the earnings alerts are the select earnings that offer good opportunities, offer us an edge. I do those. And then I do the weekly options select, okay? So it may seem like a lot, but it gives you enough opportunities to diversify your portfolio. For example, last week, the weekly trades didn't do all that well. In fact, last month, the XLV and Cardinal Health was the stock we were in, and it actually was down a little bit last month, but here's the thing. Our earnings trades did very well last month, and the option select last week in particular did very, very well. So you got to diversify, you got to learn, and not only that, but using options. I've gotten a couple emails from some people who said, Tyson, I don't trade options. I believe everybody needs to learn how to trade options. And one of the main reasons is, I'm going to use an example from last week. One of the main reasons is because there is no other asset class in the world that can give you the type of returns that options can give you. I'll give you an example of that. Last week, here's the trades that I called out for last week's option select. Priceline wanted to buy the 1232.50 call, all right, is a straight call, and my target was up to about 1263. Okay, so I was thinking this was going to rally up. I was willing to risk the entire thing. The trade cost me $13. Okay, so I was really willing to risk the entire $13 because my target, if I would have hit my target, it would have been worth about $31. Okay, so I'm risking 13 to turn it into 31. My profit potential was going to be somewhere around $18 or so. Well, I ended up getting in late Thursday morning, got in for $13, and it closed on Friday for $27.50. So that was a $14.50 profit. So if you think about what I just did there, and again, I am creating that options course. Should be done by the end of this week, and it's going to be free to the first 1,000 subscribers. I'm telling you, it's going to be probably the best options course out there. You guys that are subscribing. Paying subscribers, you get it for only paying subscribers. Okay, I want to make that very clear. Only paying subscribers, the first 1,000 paying subscribers will get this options course free. Trial subscribers will not get it free, but if you subscribe, you'll get it free if you're within the first 1,000. You'll also lock in that low $74 a month. After we get above 1,000, I'm going to charge $1,000 for that options course, and the monthly subscription fee goes to $99 a month. But if you're the first 1,000, you lock in that $74 a month for life. But anyway, let's look at this. So only with options, that's the only asset class that I know of that can take, you can buy something for $13 and literally within 2 days, because I got it on Thursday, sell it for $27.50. That's over double what I bought it for. Bought it for $13, sold it for $27.50 within a day and a half. That's absolutely huge. And again, options are the only asset class that I know of that can make that kind of money. But here's the trades that we did last week. We got filled in all 5 of them, which was good. Some of them we got filled in late. Chipotle and Regeneron got filled in late, and Priceline. But here's what I did. I bought the 1232 calls in Priceline, $13, sold them for $27.50, profit of $14.50. That's great. HPQ bought, I think it was the 3350s for 24 cents, sold them for 29 cents, so profit of 5 cents. So not great, nothing huge. Amgen, I bought for $1.80. And it expired worthless, so I lost $1.80. For Chipotle, we did a credit spread. We did the 6, I think it was the 622.50 by 620 bull put spread, collected 45 cents. With these spreads, and we got a spread today, you need to have price close above your short strike. So our short strike was 622.50. It closed above that. We collected the 45 cents. Great. Regeneron, we did the same thing. I can't remember the exact price, but we needed it to close above our strike, and we closed the 50 cents. So 4 out of 5, very profitable week with the option select. So now let's go into what we're doing for this week. Okay, so first one I want to look at is Intel. Okay, so Intel, let me go to the dashboard here. So Intel closed last week at $33.42. Okay, so it's in an uptrend, closed at $33.42. Well, on a weekly basis, I'm clicked on a weekly tab. Okay, so on a weekly basis, Intel has an expected high of $34.25. Okay, and it's got a 51.9% chance of hitting that historically. So this is good. This information with how high it should go and the probabilities of it hitting that, that's pretty much all the information I need. So I know it closed at 33.42, so that'll help me get my at the money call. I know how high it should go this week, 34.25, and I know the probabilities of it hitting that, 51.90. So now that I have that information, I pretty much got everything I need to figure out if I have an edge or not. So let's get this. Let's kind of recap this. Let's go over this. Intel, all right, closed at $34 and $33.42 last Friday. So that was what it closed at. Its trend side level, okay, its expected high because it's in an uptrend, is $34.25. The at the money, so the closest to the current price option, call option, all right, so calls is $33.50 because it closed at $33.42. So the at the money call is $33.50. Well, if I do the math, so when I buy that call, so I can buy the call for the $33.50 call. That gives me the right. Whenever you buy a call, it gives you the right. All right, you don't have the obligation, but it gives you the right to buy that stock for that price. You don't have to buy it. So it's an option, so therefore it's going to be a discounted value because I don't necessarily have to buy it. Now, here's the thing. This current option is trading at 25 cents. Okay, so what I know is I can buy the right, okay, I can buy the right to buy shares in Intel for $33.50. It's trading at $33.42, so get this. If price does nothing, and it costs me 25 cents, if price just stays still all week long, closes at $33.42, I lose 25 cents. Because I have the right to buy it at $33.50. It cost me 25 cents to buy that. So why would I want to buy that when price is lower? So my break even on this trade, this is how you calculate your break even. I've got the right to buy it at $33.50, and what's that right cost me? It's cost me 25 cents. So my break even is $33.75. So you might be thinking, well, jeepers, your break even is $33.75. And price is currently trading at $33.42. Tyson, why would you buy that? It seems like you're losing. You're going to lose money. Basically you put the trade on and you're kind of, it's got to rally up almost 1% for you to even make money. Yep, true, but here's the reason why I'm going to do it. Because of the historical hit rates that Wealthy Trades tells me. Remember, the expected high is $34.25. That's what I care about. I care about what the expected high is, and the expected high for this week is $34.25, right? So $34.25 is the expected high. So if I buy the $33.50 call and we hit $34.25, all right? So I buy it the right to own it at $33.50, and then we hit $34.25. Now my call is going to be worth 75 cents, at least 75 cents, because remember, I have the right to buy Intel at $33.50. It's now trading current price. I'm expecting current price to go to $34.25, making my call worth 75 cents. Well, if that's the case, all right, if I buy it for 25 cents and now it's worth 75 cents, I just made 50 cents, right? Okay. Now think about this. I'm going to go down here. I want your eyes to go right here. So what do we know? We know that, okay, the hit rate, the expected hit rate to the trend side is 51.90. That's how often. I got that from Wealthy Trades, right? So it should go up to 34.24, 25, and it's got an expected, it hits that 51.9% of the time. So if that's the case, okay, I'm going to put 51.9 in here, and if it hits that, then my profit, all right, or technically my profit is going to be, technically it's not 75 cents. My profit it's going to be worth 75 cents, right? Because it hit $34.25. I've got the right to buy at $33.50. That means the options were 75 cents, but I didn't make 75 cents, right? I only made 50 cents because I bought it for 25. So I bought it for 25. It's now worth 75. It means I made 50 cents, right? So that means my profit is 50 cents. And so what I did is I did an example of 100 trades. So if I did this 100 times, and these stats maintain what they have historically, meaning I buy it for 25 cents, the 33.50, it rallies up to 34.25, meaning my option, so I'm going to put a target in at 75. My option hits that 75 and I made 50 cents. Well, I'm going to make that 51.9% of the time because that's the hit rate. Over 100 trades, if I make 50 cents 51.9% of the time, I'm going to make $25.95. Okay? All right. Well, what's that? How much am I going to lose over those 100 trades? Well, over those 100 trades, I'm going to lose 48.1% of the time. How do I get that? Well, you can't get over 100%, right? Well, out of 100% of the trades, I'm going to win 51.9. That means I'm going to lose 48.1%. And what am I going to lose? Well, I'm assuming I'm going to lose the entire cost of the trade, which is 25 cents. So I'm going to lose 25 cents 48.1% of the time out of those 100 trades, and I'm going to lose. So I'll be down $12.02. But think about this. I made 50 cents 51.9% of the time, and I lost 25 cents 48.1% of the time. Overall, this trade should make, just on a per contract basis, should make about almost $14 per contract, or $1,400 per contract. That's absolutely phenomenal. Now get this, if you were willing to risk $1,000 on this trade, you could do 40 contracts. Okay, so 40 contracts. So if I take this number times 40, I'm making 1,000. I'm making 1,038, and I take this number times 40. I'm losing 481. So this is per contract. This is where the numbers can get really ridiculous. And I'm reluctant to show you this, but that's 557. That's like $50,000 if you took this trade every. Now, again, there's not going to be 100. There's not 100 weeks, so you can't take this trade 100 times over a year. But over 100 trades, you can make about, with these stats, you can make about $50,000 risking $1,000. Again, so here's the trade in Intel. In Intel, I'm going to simply buy. So let me do this. So in Intel, I'm going to buy the 33.50 call. All right, so INTC. So INTC, I'm going to buy the 33.50 call for 25 cents. All right, so I'm going to buy it for 25 cents. My target's going to be 75 cents. So INTC, here's what I'm going to do. I'm going to go like this, and I'm going to go INTC, the 33.50 call. Sorry about this. Should have had this ready, but that's all right. So let me make this a little bigger so everybody can see it. So INTC, buy the 33.50 call for 25 cents. And my target is going to be 75 cents. Okay? That's going to be that trade. All right, next trade, Apple. Apple closed at 128.95. I'll recap these. It's got an expected high of 131.73. The at the money call is the 129. All right, so if I hit my target, so my target's going to be the expected high of 131.73. If I buy the right to buy Apple at 129, that means it's going to be worth $2.73. So it's the high, 131.73, minus my call. So it's $2.73. It hits that 67.3% of the time. So if I take these numbers, I take 67.3, and my profit potential is $1.33, right? So because the at the money call right now costs $1.40, so is $1.33, and that means I'm risking $1.40 because that's the at the money call. Get this, look at this, over 100 trades, I'd make $89, and I'd lose $45. Huge trade. So here's the trade in Apple. I'm going to buy, so AAPL. I'm going to buy the 129 call for $1.40. My target, what was my target? My target's going to be $2.73. So I'm going to buy the 129 call for this week. These are all this week's expirations, so the expiration will be May 8th. So I'm going to buy the 129 call for $1.40. My target is $2.73. All right. Next one is in MO. All right, MO closed at 50.66. Trend side is 51.58. So the at the money call is 50.50. That means if I hit that, it'll be worth $1. If I buy the $50.50 call and it hits the expected high, it'll be worth $1.08. Well, I can buy that right now, all right, for 52 cents. So I want to buy MO. I want to buy the 50.50 call for 52 cents. And my target's going to be $1.08. Let me just make sure that's all correct. So, yep, I'm going to buy the $50.50 call for 52 cents, and my target's going to be $1.08. For Baidu, I'm going to buy the 202. I'm going to buy the 202. You might be wondering, Tyson, why are you buying all these? Well, because we're in an uptrend. I'd rather be buying again, going because we're in a weekly uptrend. I'd rather be going with the trend than against the trend. I'm going to buy this for $2.80. All right, it should hit 209.49. So if I buy for 280, that and we hit, and I buy the 202.50. If we hit that expected upside of 209.49, it'll be worth $6.90. So $2.80. So what I'm going to buy it for, it'll be worth $6.99. How did I get that? Again, I took what my at-the-money call is, so the expected high is 209.49 minus my at-the-money call, which is 202.50, gets me to $6.99. Those are my calls, okay? So here's what I'm going to do for my calls. I'm going to buy, so I'm going to recap this. This is my just straight long calls. I'm going to buy the Intel all this week's. I'm going to buy Intel 33.50 call for 25 cents. And put a target of 75 cents. So this is literally a set and forget trade. I'm going to put the trade in, limit order, 25 cents. That's my limit to buy, and my target 75 cents. If I get filled, I don't care if I get, like Priceline, we didn't get filled until Thursday last week. So I don't care. I'm going to just buy it for 25 cents. My target's 75 cents, and that's good all week long. So it's a real easy set and forget trade. Apple, I'm going to buy the 129 call, this week's 129 call for $1.40. Target $2.73. If you're thinking, Tyson, what's your stop? My stop is I'm willing to risk the entire trade, right? So on 1,000 contracts, if you're kind of thinking, well, what do I do for 1,000 contracts? Well, let me just show you here. Whoops. You would do this. Divided by the Nope. Okay, so let me just do this with a calculator. Sometimes these Excel spreadsheets. All right, so for 1,000, it's going to be $25 a contract, so you could do 40. So let's do here. I'm not suggesting 40 contracts. I'm just saying, if you were willing to risk $1,000 per trade, you could do 40 contracts on this one. $1,000 a trade on this one it'd cost you $140. Options are priced in prices of 100, so you could do 7 contracts there. It'd be 52 for MO, so that would cost, you could do 19 contracts there, and then for Baidu it'd be 280. So you could do basically, I'd run that to 4 contracts there. So 40 contracts in Intel, 7 contracts in Apple, 19 contracts in Mo, and 4 contracts in Baidu for the long calls. So Mo, buy the 50.50 call for 52 cents, target $1.08. For Baidu, I'm going to buy the 202.50 for $2.80, target $6.99. I got one more trade, which is a spread, SWKS. All right, let's look at this one real quick. The thing I love about this is it has a very low rate of hitting and closing below. So the levels on levels is what I look at for spreads. So it's got an expected low of 95.47. It only closes below that historically 11.5% of the time on a weekly basis. So I want to take advantage of that. All right, it's got a little bit overpriced options, and it's got so anytime I get overpriced options and a very low probability of it closing beyond those levels, I want to do spreads. So in SWKS, I'm going to do the bull put spread. I'm going to sell the $95 put, and I'm going to buy the $94 put for this week, and that's going to create what's called a bull put spread. I'm going to collect 20 cents on that. Okay, so I'm going to collect 20 cents. So for SWKS, I'm going to sell the 95 put, and I'm going to SWKS at the same time, buy, so this is one trade, the 94 put, and that creates my bull put spread, and I should collect 20 cents. So so my premium on this should be 20 cents. Why does this work? Well, let's think about this. If I collect 20 cents, 88, so my win rate on this is a very high probability trade. As long as SWKS is above $95, I make money. Well, it closed at 98.29, so this is a very high probability trade. So I'm going to win 88.5% of the time, and I'm going to make 20 cents 88.5% of the time. So my profit over 100 trades would be $17.70. I'm going to lose the other 11.5% of the time, and I'm going to lose 80 cents, so $9.20. So here's the trades. SWKS, I'm going to do a bull put. I'm going to sell the $95 put. I'm going to do this all in one trade. So sell $95 put and buy the $94 put for a bull put. Collect 20 cents, minimum 20 cents. Then I got 4 straight calls. So I'm going to buy Intel. I'm going to buy the 3350. This week's 3350 call. Oh, SWKS was also this week. So this Intel, I'm going to buy the 3350 call for 25 cents. And my target is 75 cents. So these are all set and forget trades. Put it in, limit order to get in 25 cents, limit target 75 cents. Easy. Apple buy the 129 call this week for $1.40, target $2.73. Emo buy the $50.50 call for 52 cents, target $1.08. And then Baidu buy the 202.50 for $2.80, target $6.99. For SWKS, if you're doing the $1,000 risk, then you take my risk is 80 cents, right? It's a dollar spread. I collected 20 cents. That means my risk is 80 cents, so $80. So I take 1,000 divided by 80. I can do 13 contracts on that one. Okay, so I'm going to do on a $1,000 risk. You do $40 contracts on Intel, 7 contracts on Apple, 19 contracts on Emo, and 4 contracts on Baidu, and then 13 contracts in the bull put spread on SWKS. Remember, at the same time, so you do this in one order: sell the 95, buy the 94. This week's put, collect 20 cents or more. These are the trades I'm doing. These are the wealthy trades. Option select. Last week we did great. This week I expect the same thing. This is the reason why you need to subscribe. I am going to be doing that options course. We'll be going in detail into this. I might actually even do some not in person, but live webinars, maybe even on a weekly basis, maybe even more often, just so you guys can fully understand what we do and how to really leverage and take advantage of the Wealthy Trades information. Let me know if you have any questions. Email me at info@wealthytrades.com, and let's make it a great week. These are the trades, and we'll talk to you soon.